Hello, traders. Whoa. Hang on. Okay. Hopefully, your speakers still work after that. Um, Hello, everyone. It's 8:02 a.m. Chicago time on June 3rd, 2019. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off again as more windfall comes in from the China U.S. Trade war. Markets testing lower. Note, however, that we're pushing into a pretty crucial area down here at 2737 through 2727 in ES. I'll discuss in a bit. But overall, the market stance this morning is risk off, but nothing extreme. It looks like the Nasdaq is the laggard this morning at down about 20 points or 0.3%. And the dollar's off, surprisingly, down 13.5 cents, trading at 97.53. The Dow's down 20, the S&P's down only 2.5. So the market has recovered a little bit from the lows, which in the S&P are about 20 points below. We see that the up markets are all the usual suspects when it comes to allocation to safety. Gold is up $8.70. Gold is approaching $1,320, 1,320. The bonds are up 15 ticks. The euro's up 160 pips or so, and the 10 years up 6.5 ticks. So that's where we stand this morning. Clearly risk off, but the market has recovered a lot from the lows of the overnight session. Let's take a look at what's expected going forward today. We're just going to share the calendar here with you instead of reading through it, boring you to death. Basically, these are the top tier releases. These are the major releases for the week. You just need to be cognizant of the fact that they're coming through. The times shown here are set to Chicago. So that's 1 hour behind the U.S. East Coast. So add an hour. So, for example, ISM Manufacturing PMI comes out at 10 a.m. Eastern U.S. time. But we can look ahead and see what's on deck, right? Tomorrow, the U.S. doesn't have much. Wednesday, we have ISM non-manufacturing PMI. And the reason I do this is to just look ahead on the week and make sure that I'm aware of what the key releases are. Clearly, Thursday's heavy with the Eurozone GDP growth rate, the balance of trade in the U.S., and then Friday, being the first Friday of the month, is non-farm payrolls and unemployment. Okay, so that's what we're looking at for the week. For today, if we back it off a little bit and look at what's out for today, we got a couple of Fed speakers, U.S. market PMI, and construction spending, 10 o'clock Eastern, ISM manufacturing, as I said, at 10 o'clock Eastern. And then for the rest of the day, it's pretty clean and clear. So those are the expected or scheduled interruptions to the auction. As far as what we expected, On Friday, the primary scenario on Friday is responsive buying into that 2768 area, expecting it to get tangled up in there, and then a potential push into 2776 before the market rolls over and pushes to 2753 and 50. This is a mid-century figure right here. So that was expected, and for looking for the bounce. Pretty typical expectation for a gap down of this nature. That's the primary scenario. The secondary is reversion back and an aggressive seller step in at 2768 and then push it down and through to 2733 or so. Here's what actually happened. Scenario 1 was on point. Let's try to ram this in here. Scenario 1 was on point. We had a very clean open auction out of range. Tried to get back to the other side, could not, but you can see that the pullback was very deep, so that makes it an open auction. Two-way action is likely in this scenario. And then we breached the opening swing low, so thinking short side only. Look for mid. There's your mid setup right there. Hopefully some of you are on that. The mid at 2757 for continuation. The expectation, as I talked about in that video with Anthony Crudelli, the expectation is the last low. So we have an impulse down. Clearly the market is breaching to the short side. We're looking for shorts against the mid. Short against the mid sets up along with VWAP there, and then pushes through, takes out the low. That's the key target, and anything below there is considered gravy. Pushes through to 51 for the bounce, and then we start to get really, really choppy. The market then reverts back to this key area, this 67, 68 area, and comes off and pulls all the way down to 27.50 being the low a day. The market closed at 27.52. So what we have here is scenario 1, but done in a kind of a weird way. The expectation is for an open auction, push up into this zone, this 67, 68, and then come off, consolidate in the middle, and then move down into the 50 area and bounce back up. That's what was shown here. That's the plan there. Okay, so we got that same setup, but first we tested down, then up, and then down again. Another neutral day. We broke the first hour's high and the first hour's low. And we ended up finishing actually at the lower end of the range. The interesting thing about Friday is the profile shape. So if you look at the profile shape here, what it's showing is just a complete lack of consensus. There's nothing here that says, yes, the market is balancing out, even though it was neutral in that it took out the first hour's high and low. There was nothing here that says that the market has really found its balance point. Balance, again, for those who are new, balance looks like this. That's what we would expect. This is a simple statistics, right? We expect an extreme of price one end, extreme of price the other end, and a bulk of the trading to happen in the middle, and that basically gives you your supply-demand curve. It gives us that point. For those who are economic heads like me, that's basically what this market does. These lines kind of shift on top of each other as we discover, and then the amount, which is not represented here, the amount is shown on the profile. Just basic statistics. And what this says is, look at this profile. It's really blunt. It's tested every price at every throughout the range with absolutely no conviction on by both sides that good price has been had, and that trading can now commence with volume. Contracts can exchange hands with volume. And so what this this shows with the point of control being at the low end of the range is a high probability continuation lower on the reopen. Those of you who have been around a while should know this, that when we finish up like this, we are the auction is likely not to be done, and it's likely to continue lower until it finds those buyers, and it'll continue to advertise prices lower and lower and lower until it does, which brings us into our overnight. Right? So when we look at the overnight session, we would expect that had we not had the break between whatever it is, 5 p.m. Eastern on Friday to 6 p.m. Eastern on Sunday, we would have watched the market just trickle down to this point when the markets open on Sunday. And what we've done since is through the Asian session, we've sat sideways. We really didn't accomplish much. Very, very balanced profile. And then once the Europeans came in, the European markets opened right here at 2 o'clock Central, immediately dipped down, and then buyers saw an advantage to these lower prices, started buying them up. This 27.31 quarter is a key area from way back in March, and buying has started to materialize, and now we keep pushing back into the prior days, in towards the prior days range. So the overnight high is such that it has really recovered back to Friday's range low. So a market that has already reverted. And so the overall profile is balanced. Okay. This area right here is an important area to mark. 27.37 is the point of control for the entire year last year, plus the volume from this year. So this is the major balance point at 27.37. On top of that, we have several areas of confluence right below. So you'll see these stock zones kind of stack, and you'll see red zones in here, one of them being the 27.37 and the 27.27. These areas are likely, if we do push into these areas, we're likely to encounter, the expectation is we're likely to encounter pretty significant support. I expect bounces off those areas on retests during the regular session. Okay, so we've come off pretty much over 200 points over the last few weeks from the high that we've had, and the market's doing a good job of pushing back up. The overnight volume is relatively strong. There's pretty good participation here, 349,000, as it says right there, 349,000 for volume. There's pretty good participation, expecting that to continue into today's session. Okay, so that's the review portion. We got scenario one that played out, and now let's take a look at what we're expecting for today. Let's clean this up a bit. So we've broken down below 2 days of balance and left a small gap zone behind. So we have a gap zone up here that is above, okay? And we have 2 days of balance up here, and we've got a fairly mature profile. If you remember, I talked about this on Friday, that this is a fairly mature profile. Even though it's been 2 days, it's got a significant amount of kurtosis in this 85 area, 2785 area, and it's going to likely act like a magnet. Right now, we're trading down here. So the expectation this morning is that we're likely to open just slightly out of range. The expectation is an open auction just slightly out of range that balances out a little bit to the downside, and then I'm looking for an impulse to bring us back into the range to trade this 2753 area. Don't forget, this is 2750, a mid-century figure, and it's likely to encounter two-way action as it's another major option strike. Eventually, I'm expecting this to resolve to the upside. Areas to watch out for are somewhere around 27.62.63. I expect it to balance out here, and then I expect a retest of 68 before it fails again. Okay, that's scenario one. That's barring any news, any tweets, any press releases, spokespeople from China, whatever. That's if the market's under its own power. The secondary is an open auction that tests into the prior day's range, impulses down, gets back into 43, and then moves towards this 37 to chop around for quite some time. I'm expecting a lot of turbulence in this 37 area. This is a major acceptance area, a very, very advantageous price for buyers to start getting involved. Those who have a bias to get long, this is a really good price to get in. I'm talking about the higher time frame. And then I'm expecting it to test lower and then push back up and close somewhere in around the open. This is what I'm looking for today. I'm not expecting any violent moves or anything like that. It had a chance. The market had a chance on Friday to do something with that close. Look at that volume on the last 15-minute bar into the cash close. There was a ton of volume that went off with hardly any movement in range, and that gave us that point of control. There was a lot that traded down here near the low of Friday. It looked to me like there was a lot of there was almost a jam at the exit into the weekend. Nobody wanted to be caught with surprise announcements and so on over the weekend, and so a lot of people managed to get out, but somebody had to buy these for this volume to actually exist, right? For every buyer, there's a seller. There's never more buyers than sellers ever in futures, ever, because we create in futures and derivatives, we create contracts out of thin air, right? They're backed by the underlying, and there's an infinite number of them that can be created, and it can only be created if two people come together and agree on the price to have that contract execute. Otherwise, that doesn't exist. So when we see something this big here, we see a lot of volume. Both sides are getting involved, and that's why I expect quite a bit of balance today. That's part of why I expect quite a bit of balance today. Okay, so hopefully that makes sense to you, and you can kind of extrapolate whatever fits into your plan and just trade that. Good luck today, and I'll catch you tomorrow. Take care.